When I was 21 years old, I was a Division I tennis player at the time, and really as soon as my aspirations of playing pro tour tennis diminished, I realized I wasn't good enough to do that. I just kind of thought to myself, like, what can I channel this energy into? Like, what can I perform at a high level at? And what is kind of similar to playing tennis, where it's very easily quantifiable how good you are. There's always room for continuous improvement rather than doing something where you're essentially getting a participation trophy for showing up. So around that time, I stumbled into trading. When I first started, I was of the mindset that like, oh, fundamentals are everything, like deep value investing is everything. And like technical analysis is like so stupid and there's no edge in it and like it's just completely silly. And maybe 30% those other disciplines like fundamental analysis and macro and event-driven trading.
I've never met a trader who ever just said, hey, I thought trading would be exactly what it turned out to be and I didn't have to change my mind or grow. The Dunning-Kruger effect, right? And the idea is when you know nothing, you read a book, maybe two, and you just go, hey, I figured it out, I got it all. And then at some point you get slapped in the face and you end up way down here and then you spend the rest of your time working your way back up. Okay, everyone, welcome back to the channel where today I am chatting with a buddy of mine, Andrew from Pristine Capital. Very interesting kind of way that we've met. We've been chatting for a long time on Wolf Financial Spaces. Every Monday we play a game, but we're actually talking about stocks where we try to pick a couple names that we think are going to perform well that week, and then we go back the next week and review them. It's super fun. It's on Monday nights if you want to check it out. But Andrew and myself have been on there for a while, and I really was very interested in the way that Andrew trades. I know he takes in a lot of fundamental data and things like that I don't. So I thought this would be a really cool conversation because I like to talk to people who do stuff differently than me as opposed to people who are doing just the same stuff. So Andrew, why don't you introduce yourself to the people, tell them a little bit about what you're up to and where they can find you at.
Yeah, what's going on, Michael? Thanks so much for having me on the show. Yeah, my name is Andrew O'Connell. I've been trading for about 10 or 11 years now. And really, I started in about the year 2015. It was when I was 21 years old. I was a Division I tennis player at the time. And really, as soon as my aspirations of playing pro tour tennis diminished, I realized I wasn't good enough to do that. I just kind of thought to myself, like, what can I channel this energy into? Like, what can I perform at a high level at? And what is kind of similar to playing tennis, where it's very easily quantifiable how good you are. There's always room for continuous improvement, et cetera, rather than doing something where you're essentially getting a participation trophy for showing up. So around that time, I stumbled into trading, and it was really just some clients that I was teaching in tennis. They brought up the markets, and it just absolutely fascinated me. So from that moment forward, I just kind of locked in on it. I was like, okay, trading, I'm going to try to be the best in the world at this, and this is going to be my sole focus moving forward. And really, since then, I have not looked back. So I started my career at the Vanguard Group, and I was working as a brokerage investment professional. I was talking to their clients, helping them plan for retirement. So I got a really good high-level look at the market and a really good high-level look at investors and that sort of thing. But in my own time, I was trading my own accounts. I was studying for the CFA exams and also the FRM exams and really just trying to get my feet wet. I was reading a whole lot of books. This is something that we've chatted about before, but I essentially tried every strategy. So now the strategy I have today is a blend of a bunch of different disciplines. So I tried being a global macro investor. I tried value investing like Warren Buffett. Just all these different styles, like you name it, I tried it. If there's a YouTube channel out there, I watched it. If there's a service out there, I've tried it. So yeah, I've basically just been sponging up information for really the last decade. And now what I'm doing is really just putting the package all together. So I ended up working my way from the retail department at Vanguard onto their fixed income trading desk. And that was a wild experience where I got to see the fixed income world. And that really just opened my eyes up. And now today I do a lot of bond trading via the TLT ETF. So I've had all these kind of tangential experiences in my career that have really just blended into the trader that I am today. And really now my goal is just competing in the US Investing Championship for 2023, I came in ninth place in my division with
Wow.
a 103.5% return. And I'm competing again in 2024. And my goal is really just to build a track record over the next, 5 to 10 years.
Well, first of all, that's wicked, and congratulations. I know we already chatted about that personally, so congratulations on that. For those who don't know, the U.S. Investing Championship is the most, in my opinion, kind of legitimate way to to prove that kind of trading style and to prove the results, because they're not just going by your word, right? They're not just saying, oh yeah, you posted a couple of good trades on Twitter and away it goes. So also I noticed you said you were taking the CFA and you were doing some education there. I did not hear CMT mentioned, so I'm gonna bug you about that. Why not come join us? It's fun over here.
Yeah, yeah. My thinking on this has completely changed over the years. So back when I was studying for the CFA exams, I think what I've realized over this last decade is how closed-minded I was at the beginning of this journey and how open-minded I had to be to all these other disciplines. So like when I first started, I was of the mindset that like, oh, fundamentals are everything, like deep value investing is everything.
Mhm.
And like technical analysis is like so stupid and there's no edge in it and like it's just completely silly. And that was my mindset for several years. And now what's crazy is the strategy that I use today is probably 70% technical trading and maybe 30% those other disciplines like fundamental analysis and macro and event driven trading. So, yeah, it's pretty wild. I mean, if I was starting today, the CMT is probably a path I would consider, but it's just kind of crazy doing all these different like side quests along the years that just kind of build up the background.
But you have to, right? I've never met a trader who whoever just said, "Hey, I thought trading would be exactly what it turned out to be, and I didn't have to change my mind or grow." But I brought this up while you were talking about that whole this is the Dunning-Kruger effect, right? And the idea is when you know nothing, you read a book, maybe two, and you just go, "Hey, I figured it out, I got it all," and then at some point you get slapped in the face and you end up way down here, and then you spend the rest of your time kind of working your way back up. So I'm glad that, hey, again, we get everyone eventually, right? Eventually they all come over to technical analysis, they all come over to charts. I look at the chart on Oxy and sometimes think that, when Warren Buffett passes and there's his memoirs out there, he's going to say, "Yeah, I had a technical analyst on staff. That's why we were always buying at certain prices." Because it seems like, in a lot of cases, that does that. So now you talked a little bit about how you experimented with global macro, but I still see you do a little bit of fundamentals. So you said 70% technicals. So what's that other 30% look like? Because the reason I'm interested in that is because, as you know, I am probably 30% algorithmic, statistical arbitrage, that kind of thing, and then 70% technical. So the whole fundamental side of things, I know absolutely nothing about. So I've got no value to give you to our audience there, but I do think that you'll have some.
Yeah, so the fundamental side for me is, as I was kind of building up my toolkit, at first, like I was saying earlier, I thought fundamental analysis was like it. I thought it was the holy grail. So I went so deep on it and I maybe spent, I put in like my 5,000, 10,000 hours on like DCF analysis, modeling, relative valuation, which I think is way better. Relative valuation is basically you're just looking at what a company's worth and maybe you're comparing it to other peers. But yeah, what I still use in my analysis, for example, I have a dashboard that I could share with you if you'd like.
Perfect. All right, Andrew. So we're seeing your dashboard here. Give us a little bit of walk through it and let us know what we're seeing, what we're looking at here.
Yeah, so this is a fundamental dashboard that I built. And what I'm trying to do is just take a look at some key variables for a bunch of different mega cap tech stocks. because we've got all the narratives online of this stock is overvalued, this one is
Hmm.
undervalued, etc. And what I find is crazy is people will just hone in on one variable and they'll just get super laser beam focused on it. They'll make their whole decision on it. This is a couple different things. So, one of my big high conviction trades for this year, because I'm more of a swing and position trader, is PayPal. And one thing that I honed in on within this table is the cash they have on their balance sheet as a percentage of the market cap of the stock.
Yep.
So I'm basically using cash as a proxy for like, what does this company have? And then the market cap is what is the market assigning to them? They have 14% here. So that basically means market cap's like 64 billion
Hmm.
and they've got 9 billion in cash on hand. So they've got a lot of optionality. And if you look at some of these other mega cap tech stocks, it's pretty much nowhere near that same level of cash as a percentage of their market cap. The other thing I like about PayPal is the buyback yield is very high. And the reason why I like looking at this variable is because it can directly impact the stock price. Like if these guys are buying back
Yeah.
their stock, that's reducing the number of shares outstanding, and that is artificially inflating their EPS. And we know stocks move on EPS. So I see that here. Gross margins are maybe not as good as some of these other FANG stocks, but they're still pretty great at 45%.
Yep.
They generate good cash flow per share. Return on equity, not as good as some of these other big mega cap tech stocks, but still pretty fantastic at 21%. We've got their revenue growth here. And this is the key. So the forward PE ratio is only 11.73. And this is basically saying like the market's not giving them much respect. The market thinks that the company is going to grow very slow or they're maybe going to start shrinking. And you can see here the revenue growth estimate that's projected is pretty low at 6.9%.
Hmm.
But look at the forward PE ratios of these other companies in here.
Yeah,
They're
like
basically
double. Yeah.
double what PayPal is. So basically my assumption is if PayPal can accelerate their revenue growth just a little bit beyond these expectations that are currently baked in, we could get a forward PE ratio for PayPal that suddenly doubles. Or maybe even conservatively, maybe it just goes up to 15 or 16. And that would be a pretty fantastic return. So I basically look at this stock and say, market's assigning a low valuation to it, probably because the market thinks it's going to grow slow. And then I combine that with the fact that PayPal just got a new CEO 5 months ago, and they have all these growth initiatives that are lined up to hit in 2024 that have not hit yet. So, my thesis here is I think if anyone just gets the slightest bit optimistic on PayPal, whether it's a headline, whether they have a good earnings report, I think the stock could really revalue higher.
So that's interesting. And yeah, let's pop over. So now we're looking at the chart here, right? So do you take now for me as a technical analyst, I look at this thing and say, well, still in a downtrend on the weekly chart. Some pretty key resistance, kind of up here, say 66, $67 a share. Do you then take that fundamental thesis and wait? Do you start kind of nibbling now and then take the trade? Or I'm just trying to figure out kind of the process here. So is it fundamentals, narrow the universe, technicals for entries and exits, or is it some sort of kind of combination of that?
Yeah, so the weekly chart is an absolute train wreck, and the
Hmm.
stock, I think it's down like 70 or 80% off of its highs. If you zoom into the daily chart, this
Yep.
is what I'm looking at. So basically, my technical assumption for the stock is that hey, this stock hit its low back in November. If you look at that big washout,
Yeah.
so
It's
that's
right
that's
here.
my key. Yeah, that's my key line in the sand. If the stock goes lower than that, my thesis is completely invalidated. So I'm
Okay.
using these technical levels, but this was my entry, man, and this is what's so cool. If you look that yellow line you have on your chart, that was the latest earnings report,
Yep.
and investors into that earnings report, the stock had a nice run up because maybe people were thinking the same things I was thinking. They just got a new CEO.
Hmm.
Maybe things will look a little bit better. the stock ended up having like a very small beat on revenue and EPS, and the stock cratered. And you can see horrible candle right after earnings, but then look at the candle right after it.
Yes, yeah. Let's see if I can get in a
So
little. But yeah, I see that, right? You had the washout down move, and then from there the next very candle was pretty much, technically not a bullish engulfing, but pretty close, right? A reversal of whatever happened on that day, right there. And that I see that, and that's a very interesting kind of technical pattern where you have this, kind of slap in the face to anyone who piled on after earnings and anyone who got short into that period of time. So that was your kind of trigger, is saying, okay, well, I have this fundamental thesis, and then there's this bullish event that took place for me, and that's where I'm going to get involved.
yeah, so I started watching when we got that bullish engulfing candle. I was basically, hey, anyone that got negative on this stock, or like, if you sold on that earnings day, and then the next day you see that bullish engulfing, that's a huge expectation breaker.
Hmm.
So I waited. Now that's my new line in the sand. If the stock gets below that earnings low of day, that's an invalidation for me. But I waited until we got that higher low. If you see the next red candle there,
This guy here, yeah.
yep, I got in on the green candle immediately following that.
Oh, okay. That makes sense. It'd be interesting to do some anchored view app work too, because one thing that I don't have that open right now. One thing I always like to do if I'm trying to, bottom picking is not the right word, but I'm trying to buy something as it changes in trend. I always like the anchored view app from the very low, like the absolute
Mhm.
low, and I can use that as a point as well. So that's an interesting way to play. Now, is it do you scale from there, or are you kind of, this is my trade, I'm in, this is my out, that's where I'll get out, or is there any kind of like adding in as thing goes, or subtracting or anything like that?
Yeah, so for this particular trade, and the thing is, I do it differently on every single trade. For this one, I feel really confident that the market is so down on this stock.
Hmm.
And if you just hold it over time, they've got the cash, they generate great cash flow, they've got the buyback. There's a lot of those like structural tailwinds here. So I went fully in on the full position there. I ended up buying leap call options. So I bought the June of 2025 call options. I went out a year and a half. And really, with this particular trade, I'm basically trying to catch the trend reversal. And
Hmm.
my mindset is, hey, this stock could go up 50%. It could go up 100% from these levels. So I'm basically taking a big position on it. I'm using those call options. I'm adding a little bit of leverage on top, but I'm giving myself a lot of time. I have a year and a half to basically let this thesis play out. So I think that's another thing very different for my personal style. For a trade like this, I'll be thinking about it for like weeks. And I'll be thinking about it, letting the idea marinate in my mind, doing more research. I'll listen to the earnings call, I'll watch some of the events, I'll look at the chart. And by the time I place the trade, I've just thought about it so much that it's like, all right, I'm comfortable losing on this thing. I did my homework. If it invalidates me, it invalidates me, but I feel comfortable with this trade.
Well, and so the thing I'd really want to hammer home on this whole thought process, which is great, right? We didn't plan this, so I think it's great to walk through the kind of thought process, is whether or not you're going to end up being, right, a fundamental guy like Andrew, or anything like that, is the fact that there is a reason to narrow the universe, right? And then from that, there is a reason to not just hop into the trade because you've heard a story that you like or you have fundamentals you like. That then the chart comes and says, okay, I'm looking for this event that I think is going to cause some sort of shock to the market, that bullish engulfing candle, that change in price. And then most importantly, the out, right? You said right away, you said, hey, that's my out. If, I'll go. In Now, knowing a lot of ways that fundamental people's trade, that might not completely invalidate your thesis. You might just say to yourself, "I'm early, right? And it's time to go now." And then I'm not going to just abandon the idea, but I'm going to wait for another event because, as we know as traders, it's better to take two, three, sometimes four tiny little hits right before you blow it out of the park, as opposed to that. Because what I find, and I think the reason that I stayed away from fundamentals for so long, is I would find reasons to stay in shitty trades based off of fundamental data, based off of, oh, it's a good company, it's got a good story, I like its product, whatever it is. And I think a lot of traders fall a little bit victim to that as well, where they're looking for a reason to stay in, where I just wanted to again highlight that you're doing it the complete opposite, right? You're looking for a reason to get in using fundamentals, and then your reasons to stay in is purely technicals. So I really, really like that. I think that's great.
Yeah. So what's cool is like with this trade, basically it also fits into like a bigger picture macro view that I have, which is these magnificent seven stocks. There's so many strong opinions on these, man. People think they're in a bubble. People think whatever. My view on them is, hey, they're all trading the way they're trading. They all have fundamentals. They've all got cash flows. I can't see anything that's like a bubble in these stocks. But at the same time, they've been rallying for over a year. And I just think the market appreciates these stocks. That's the best way I can put it.
Mm-hmm.
The market really appreciates them. So I do believe that if the overall market keeps going up throughout the year, which it tends to do during election years,
Yeah.
I think investors are going to be like, dang, I missed the Mag 7. Like, now where the heck do I go? Like, I need to put capital somewhere. So people will be looking for these other names now.
And I completely agree with you for a little bit of a different reason. Again, coming from a hedge fund background, I know that there's going to get to a point where if Nvidia keeps going, there's going to be a lot of hedge funds out there that it's like 20-30% of their portfolio, right? And they can't call investors and say, yeah, you're basically paying me 2 and 20, and I'm mostly holding Nvidia and like SMCI. So what they have to do at some point, and I talk about this all the time, is that in bull markets, that people sell the winners and then they take the cash, and because we're in a bull market, they plug it in somewhere else. In bear markets, people sell whatever they have and they go to cash, right? But we've been in this bull market now for over a year. So I expect the same kind of thing, where at some point there's going to be something that forces a lot of institutions to say, okay, it's time to ring the bell, even if it's just for a rebalance, even if I just need to bring Nvidia exposure down to, sub 10%. I have to take some off the table, and then I'm going to be left with all of these gains. And the one thing that you get punished for as a manager more than anything else is sitting in cash, right? People will call you and say, well, I could sit in cash and not pay you 2% on the cash in order to do that. I could make on the cash. So I've been doing the same thing, looking for some of these kind of low bases. Now, as more of a technical guy, I would look at something like PayPal and look for, I don't know, like a trend line revision higher or something. But it's not something I had on my radar. But certainly after this conversation, it will, because again, I trust Andrew's fundamental work. But yeah, I could look at it and say, hey, we'll grab a trend line or a major anchor VWAP, or give me some evidence here, which means I'll be later. But again, I just wanted to highlight that you can take ideas, and even if you don't agree with entry criteria or something on that idea, you can say, oh, well, just let me add this to a watch list and wait. We are doing this thing at Trade Ideas where, as you know, as someone who trades in competitions, one of the reasons I wanted to get you on first was you have experience trading competitions, and Trade Ideas is starting shorter term trading competitions. We have one going on right now. This video probably won't be up for, but we make up all these fun rules. So this one's short only. You can only short stocks, and which is crazy in this market. And the winner, we send an Amazon gift card to. So the idea behind this is that paper trading, we know a lot of people should do for a long period of time. As a software as a service company, it doesn't help us if you come and you pay for a month and you blow up your account and you leave, right? So we're trying to make paper trading while people learn interesting. At the same time, it's a contest, and contests are super fun. So, as someone, again, you talked about in the beginning for the investors contest, you did amazingly. Can you give some tips to people out there for future contests and things they can do to really maybe get a leg up, maybe get on the leaderboard, and hell, maybe win I think $2,400 an Amazon gift card.
Wow, that is awesome what you guys are doing. That's so cool. Yeah, my best guidance I could give someone, because I've been competing my whole life. Before I was doing these trading competitions, I was doing tennis tournaments.
Hmm.
And one thing that I would always do when I was playing tennis was I would look at my opponent before I would play them. And I would look at, their wins and losses. I would look at their national ranking. And a lot of times it would psych me out. And I didn't have the belief that I could beat this person. And I would end up losing to them. And I think the same thing applies for any sort of trading contest. If you're looking at the leaderboard and you're playing to win the contest, that will often hinder your performance.
Hmm.
So, what I would recommend for anyone that's doing any of your contests is focus on making your own strategy the best that it can be. And this is very cliche, but you really do want to be competing against the prior version of yourself. And if you do that and you keep getting better, you will end up on a leaderboard or you'll end up high up there. But I wouldn't focus on the contest itself, just focus on getting better.
Yeah, I love that. I love that idea because I've interviewed, we've done three now, and I interview the winners and the runners up, and a lot of them say the same thing where I almost pretend I'm not in a contest. Now it's paper trading, so they're like, hey, I'm going to go bigger. I'm going to, put my whole account in an idea I have or something like that because I have to win the contest. But when it comes down to the actual thought process and the setup, I'm ignoring everything. Some of them would look at the leaderboard. One guy said he would actually have to close it out so that he couldn't see it and just wait until the end of the contest and look and see, hey, oh, I won. That's nice. But yeah, focusing more on the setup. And it's the same for trading, right? If you focus on making money, I think that's the worst way to trade, right? I think the best way to trade is, okay, let me develop a process and let me focus, let me grade myself whether or not I did good or bad based off how well I followed the process as opposed to how well I followed everything else. So, well, this has been great. I don't want to keep you too much. When we're recording this, we're running into the open, so I'm sure you got a lot to do. But take a second, tell the world the services you offer and where they can find you and how, if they're interested in this kind of fundamental technical approach, ways that they can get in touch with you and ways they can follow your work.
Yeah, sure. So you can always find me on Twitter at RealPristineCap. And also another thing that I've done is I've productized my entire research workflow, and it all lives in Substack. So you can go to pristinecapital.substack.com, and yeah, we'd love to see you over there. There's a free version and there's a premium version as well. So yeah, feel free to sign up there.
Well, awesome. Well, again, I read the Substack. I've been doing these wolf kind of trading challenges things with Andrew for a while. So I've seen him win a bunch, and I've seen all the trades that he does. I've never looked at it and said, oh, that's a dumb trade. So, I know he's on to something with his trading. So check him out. And hey, Andrew, thanks for coming by. And hopefully I'll have you on soon. Hopefully I can convince you to hop into one of these future contests.
For sure, man. Thank you so much for having me. I really appreciate it.
Awesome. Thank you. Bye bye.